How's it going, all you beautiful people? Thank you for joining me on this amazing Friday evening. And we're going to be talking about Polygon Matic. A lot of news and stories coming around with Polygon being the Ethereum killer. So, what are we going to do with that information? How are we going to trade this thing? Well, today we're going to be going through that and all of the stuff that goes along with price manipulation. First of all, if you could go to my Twitter, check me out. I post daily on the breaking news, and I really appreciate everyone's support. It's overwhelming support. I am so grateful for all of the people watching, giving me a thumbs up, which I would love if you did right now, actually, and subscribe if you haven't seen it. So what I'm going to do here today, I'll go through a few news articles. Now, Polygon Matic, this just came out. Now, Polygon Matic actually sees the highest network activity spike in record, breaking numbers. That means Polygon Matic, if you don't know what that is, Polygon Matic is a chain or layer 2 on top of Ethereum. So basically, it's Ethereum, better version of Ethereum with less gas fees. Now, as you know, Ethereum has very high gas fees. A lot of people can't afford making certain purchases or transactions on Ethereum because of their high gas fees. Polygon Matic is here to save the day. And what are we seeing? Mass adoption. We're seeing a lot of people that are looking to a Polygon Matic and its framework in order to build their projects upon. So, they're saying 500,000 daily addresses. Look at this. Highest revenue ever. Look at these spikes right here. 35.6% gain in engagement. So daily active addresses in the first week of 2022 and over 217% revenue increase with Matic. So definitely a lot of crazy news coming out in the Polygon Matic universe. And Sandeep, who's the co-founder of Matic, Polygon sets all-time highs in active addresses and revenue. Has become too boring, nothing new in it. Amazing, I love it. And another interesting article here is that an ascending pattern. Now, this is a candlestick technical analysis pattern that's forming on the Polygon, which indicates that it's setting up for a rally, and it's not going to be much different from what you're going to see in my analysis and my overall sentiment for Polygon Matic. Now, what it's saying is that the EIP 1559 proposal, basically, it's going to be some sort of a fork of Ethereum, is going to set Polygon Matic up for a rally. Now, a proposal is going to be in January 18th. There's going to be an upgrade announcement to push considerable portion of its native Matic token out of circulation, meaning they're going to be doing a lot of burning. So we're going to be seeing a lot of market activity on that day. So market calendars, because it's going to be an interesting day to see what happens with Polygon Matic. Now, as you saw from my Twitter, if you follow me, then you know that I've been in my Polygon Matic position. In fact, I took that trade screenshot live and I posted it on Twitter to show you where my buy orders are. And as soon as it touched, I mean, I'm not saying it touched my buy order and it went up, but I knew exactly where I was going to buy. And I had my risk profile set. So right now I'm in the money, waiting for another buy opportunity to come by, which I think will. It's talking about Bitcoin, how during its limited capacity of 21 million units and how its price has increased substantially because of not only that, but it's also its mass adoption. Matic has the same thing. Matic, and another difference between Matic and Ethereum is the fact that Matic actually also has a limited supply, which will create that scarcity that Bitcoin has as well. And these are just some of the articles for you here today. So let's go through the Polygon Matic chart here. What you're looking at here is just a replay version of Polygon Matic. It's just a gamified way that we can kind of go through the market, and I go through this every single day, not just for Matic. I have a lot of experience doing day trading, everything. I started with Forex, day trading that, and I just got my interest in crypto, mainly because of the long-term investing, but I'm seeing a lot more buying opportunities just looking at the daily charts and seeing these opportunities. So now, for years, one of my practice methods for technical analysis has been this method that I'm going to be going through with you today. So first of all, what we're going to go through is typical for what a short-term trader, someone that wants to maybe get in and out of a trade once per day or twice per day. I generally don't trade that way anymore. I'm more of a long-term trader in terms of staying in a position for, on average, a week or two. So what I would do first is pretty much map out support and resistance, and my major fib retracement zone, I would say, is 0.5. And if you're wondering whether I've seen the market action, I have. I haven't seen necessarily 5 minute, but I have looked at the larger time frames to see overall what happened, meaning the open and the close for the day. But what we're going to go through is we're going to see where the price action generally forms and what are the key interest spots for some of these trades here. So first point of what we're gonna do is, just because there's a large run up here in the market structure, we're gonna do a bottom low to bottom high fib structure, and you'll see the 0.5 and the 0.68 fib retracement line zones here, and you can see that there was a lot of volume in the point fib, so we could probably use our fixed range volume to see volume was around here, and it looks like it was centered around this point of control and this high value node right here. So let's remove that for a second. And let's look at the overall market structure to see if we're expecting an uptrend or a downtrend. And when I looked at it earlier, it looked like more of an uptrend to see where it's going to break out. Now, usually I would say it might come down to 2.18 before it breaks out. But for the long-term traders, this is a good spot to buy right now. Already, like this is already at a very good spot to buy if you are planning to buy. Now, I would target around 2.8. I wouldn't, I mean, I would target my first position being released at 2.8, but let's go through the market action here and see what has happened for the day. Now, let's use 5 minutes just because it's more interesting and more gamified that way. But what do we do here? We put our 0.5 and let's look at some of our trend lines and see where our trend lines come up to. We'll use that one right there. That one right there. Cancel. We'll use this. Now, when I draw support and resistance, I try to draw it along the lines of where there's the most touches. So this is just a liquidity grab back to a run up X. And then if it comes down here again and retraces that, it's probably going to retrace on the last candle or unliquidated zone. So what I usually do is I look for spots along this trend run up here to see where did it not retrace back down. And I do see there are areas here, like around here, see they run up, but there's not really a retrace down. And then when it came down to mitigate that liquidation, it didn't reach 50% right here. So that's one zone here. See how it runs up that big candle and it retraces down? All of them, you'll see they'll have at least a 38.2 to 50% retracement back down before it runs back up. Okay, so see this one, it didn't come back all the way down to 50%, but it did end up doing it right here because these are mitigating, the large institutional traders are mitigating their risk trying to liquidate the market and run this thing up. So I would say it would come down to here, and then let's see what happens in real time. But let me just see what else we need to put in here. Let's put a fib retracement, assuming this is the low right here, because right now we don't know whether this thing continues, goes up, ranges, or goes down. So let's start this thing here and let's point this thing out. So we have our interesting zones. So what we're looking for here is if there's a breakdown, then short squeeze sellers, number one, I don't short any cryptos, so I wouldn't take any shorts. But I would take longs if the opportunity, and the target was far enough. But I wouldn't particularly take these trades. But a short-term trader may take these trades. So let's press play here and go through market instructions. So it touches this and it goes down and it is retracing this liquid zone. And let's see. Okay, so big bearish candles means it's probably gonna run down to come back to this wick at least. And if it comes down, because the wick has not, that price has to be filled. So that liquidation zone is going to be filled eventually, whether now or in a year from now, it's going to be filled eventually. So let this thing run down and see what happens here. Or it could break from the upside right here, and then with the target of right here. Okay, so we're starting to see big bullish candles and now more bearish candles. Let's see what's going on here. The time. So this started here and then we're here, so it's pretty much ranging, but it does look like there is lower lows happening and forming right in this zone right here. Okay, so see it's touching that wick that we talked about. Now is it breaking that zone? Okay, so the bullish candles are coming up now, and let's see what happens here. Oops, let me get rid of this. Okay, so this is a very strong EMA. It could be an EMA bounce. So whenever I see a bearish candle there, there's a potential that this thing is going to bounce down, and I'm thinking that it might do that, especially with this big bearish candle. Now, of course, that means it could retrace back up here and go down, but we'll see what happens. Okay, so new support was formed right here. Let's see what happens here. Okay, so this line right here is an area of resistance. Now you can tell there's a lot of volume happening in this area. So if this breaks to the upside, then we have a potential upward move to this side. But see this bearish candle? That was a liquidity grab for all the buys that are happening right above the EMA. Now what's happening is the institutional traders are selling, are buying to get in this trade, and then they're selling it this way to accumulate more orders. So right now it's still ranging. I don't know what's going on right now. Okay, so this area right here is a good sell zone, and so is, yeah, this area right here is a good sell zone as well. But ultimately, it is this area right here. The major sellers are going to come in here if it touches there. A lot of conservative traders like myself, I don't trade unless it gets to my spot that I need it to be at. And if it was right here, it would be right here. None of these small plays right here, because there's not too much price action in terms of there's small little candles happening in this area. So a sell order here isn't convincing. This didn't bounce back sharply, but here it bounced back sharply. Look at boom, 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 right? Okay, so retrace down here and it's bouncing off here. Okay, so see, it's coming back and it's gonna retrace this wick. Okay, now you have potentially a trading channel happening here. If this breaks, then it's going down more. Okay, see right there, and there's confluence too. Here, and the EMA. If it bounces here, I wouldn't be surprised downward. And with that big bearish candle happening here, see how the wicks move? It's very interesting watching this in real time for a very long time. I've always been intrigued. See now it's closing below this little trend line that's happening here, and it's coming whiplashing back and forth. But see, once it opens up this candle, if it has to retrace back. So see now these big bearish candles are forming, and this looks like a bearish structure to me. It's probably going to hit that again. Okay, there, broke. Now it's going to definitely go down to what's next zone? 0.5, right here. Boom. Yeah. 2.184. Excellent. It hit it. Now that big wick, it's probably going to retrace a little bit more and then either retrace from here down or it's going to break up. That big wick downwards is definitely looking like something that was manipulated. But see, it retraced about 50% of that wick. So this is probably a good area for a buy. But I would never buy during a downtrend. But high frequency traders, they take risky trades such as the ones that I just said in terms of buying. So where is a good buy area? See, now what I would be doing is I would be looking at retraces on the wick. Okay, so now here's a good area to buy. Does it come down? See, it wicked down here to this area to buy, and boom. Now what we're doing is we're gonna wait for this area to break. Like it has to break nicely, and then this is another target right here. But this is what we don't want to break. If it breaks convincingly, comes back down and wicks down, then we're taking a buy. See, we're not doing nothing right now. No buys at least. We have to wait for this area to break right here to do any sort of buying. And then we'll look at the price action when it gets there. Now, some traders might look over here to buy. I wouldn't. Because usually breaking this means that it could be coming for a double bottom. See, now it's breaking. Now I'm looking for a retrace down here. It didn't happen, so I'm continuing to trail this out. See, here's another support. So here's support still. Okay, maybe this thing's going too fast. Slow it down a little bit. Okay, let's slow it down. All right, what's happening here? So this came down. Oh my God. Okay, I would buy right here. If it traces that here, I'd buy right here. Okay, there's the retrace. There, I'd buy right there. Because they see there's a long candle here, followed by more resistance here, more support here, more support here. And let's see what happens if you buy there. They have to fill this candle. That's another thing. They have to fill this candle. See? Okay, so that's big bearish. Let's see. It could be that it comes down here, but I'm pretty sure that this is going to continue upwards. Yeah, it's not convinced where it's going to go, but this is a good buy because look, retrace down to the previous resistance, previous resistance, previous resistance. It's a good buy. There's a lot of opportunities here. You could even have bought right here when this wicked right here with this big bullish candle, and then it retraced back up and back down, and it hit that candle again. Boom, that's another area to buy. But so far, this thing is going up. So anyways, yeah, that 228, it's a good area to buy. Let's speed this up again. If I were to trade any trade of the day, that would have been the trade to trade, and you would have been done for the day or the week or whatever. But that's a good area right there. Okay, so I'm just gonna speed this up again. See what happens now. Okay, so now this is retracing here. So this is a good area to support. So it's probably going to continue bouncing in this range, but bouncing up because it needs to come back to this area. Now we'll analyze this wick in a second here. But basically what it's doing is this resistance, the support area has been established, and these wicks are telling us that price doesn't necessarily want to move down. And these stronger bullish candles are indicating a stronger move upwards. Here's another area. See, it supported down here. Now it would come around here and place a buy order because it's broken all ranging resistance. So see now it's where you bought right here. It's coming up. Let's see what happens here. Boom. You're going up on your price action. Now I think what time are we at? 2140. So see here, okay, here's another buy area right here. It probably took you out in that wick. Oh, there, you would have been bought in. Let's see what happens here. This is high frequency trading. If you're buying at this rate, then you're high frequency trading. What I usually do is on a larger time frame, and I trade based on that and get good DCA my positions in because I'm generally bullish on crypto. So okay, so I think this is coming up to the end. But yeah, pretty interesting day today. I'm interested in this candle right here. I'm just gonna stop it right here, and I want to analyze this candle, this big candle. Why did it stop here exactly? Okay, so that's the 0.5. Let's go back there and see what candle that is. This is the 0.5. So, um, 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 um. So interesting. It hit this area right here where I was talking about, where I said that the price didn't necessarily come down and retrace that much. That is very, very interesting, folks. Wow. Anyways, guys, I'm tired. I hope you really enjoyed that. I did, and I'm really grateful for you sitting here and taking this time to review the markets with me. I really appreciate that. So if you do have any sort of time, I would really appreciate it if you hit the like button and support the channel. I really like doing this. I have a lot of knowledge to share, and I would love to share with you guys. And I'd love in the comments to hear about more things that you'd love to see. I'm a technical analyst. I'm a CPA. I'm a finance senior professional. So I am technically qualified in reading market and volume, and I have a lot of stuff I know about. I just don't know how to say it yet. I just guess with practice it'll get better. But thank you so much, guys, for watching, and I'd love to do more. So if you could please hit the like button, I'd really appreciate that. Thank you very much. Have a great night.